Hello everyone and thanks for tuning in for another Market Outlook by Exness. My name is Stanislav Bernukhov, Senior Trading Content Specialist here at Exness, and in today's video we're going to be checking on a possible trading idea for the week ahead, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of the last week's idea. So, the idea was a long for silver with a target price of around $60. The idea hasn't reached the target yet, though the instrument shows resilience and may reach the projected target this or next week. For this week, on our list is intermediate term idea for USDJPY. The scope of the idea goes beyond 1 week and it might unfold during the next several weeks and even months. The price moves in a strong uptrend driven by the decreasing demand for safe havens and slowing momentum of GDP for the Japan, but the current position of USDJPY may become a point of strategic reversal with a potential target of 149, the area of the 200-day moving average. Here's the foundation of this idea. The Japanese yen remains to be the currency with the smallest yield among major currencies, and it's often used for carry trade operations when investors take loans in yen and invest in currencies with greater yields. As the interest rate in Japan is moving up starting from 2024, carry trade operations may become riskier. The rising interest rates are caused by the slow inflation driven by the internal demand. That's the new situation for Japan. Inflation for Japan is moving in cycles and the local bottom might have appeared in August 2025. Now inflation is moving up and probabilities of yet another hike for Japan is considered to stay very high. Yields of 30-year bonds of Japan have reached another peak of 3.4%. The highest point ever recorded. Governor Ueda had said on December 1st that the Bank of Japan will consider pros and cons of raising interest rates on the next BOJ's meeting. That's considered as a very hawkish statement because if they don't intend to do so, they say it straightly. At the same time, the yen is under pressure and is moving in a modest downtrend, being pressured by the intensified carry trade operations and increasing risk appetite on the stock market. We've observed this same pattern ahead of previous interest rate decisions in July 2024 and January 2025. Back then, the yen had started to rise 1 or 2 weeks before the interest rate decision, and USDJPY had fallen sharply, erasing all long-term gains. So for a position trader, that might be an opportunity for a short trade for USDJPY. The possible trigger for the move might be the Fed's decision this week and the press conference of Jerome Powell on Wednesday, October the 9th. And the most important publication would be on December the 19th, when traders will get the inflation report of Japan and the interest rate decision of Bank of Japan. So in summary, the idea for upcoming week is a short trade for USDJPY with a potential target of $149. The rising yields of 30-year bonds and steady inflation might result in the interest rate hike in December and a wrapping up of carry trade operations, which would cause the decline of USDJPY. The inflation report from December 19th and the supposed interest rate decision from the Bank of Japan will bring the full clarity to the picture. Remember, this is not a signal, it's just the idea for a trade, it's not a guarantee of success. Always do your own research and remember to manage your risk.